Welcome. I am Ernie Goss, McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. Here I'm on the first business day of November reporting on business conditions for the month of October. Now this is the Mid-American business conditions. That's the 9 states that we survey every month. Supply managers, they're the first link on the economic chain, so we're asking them how business was for the month of October. Now these states, the supply managers are in firms stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, and we've been doing this for some time now, and I'll get to those results right now, and they were not good. The overall index moves below growth neutral for the 4th straight month. Now, as you know, the index ranges between 0 and 100. 50 is growth neutral, so anything below growth neutral is not good. The overall index decreased to 43.8 from September's 45.5. So obviously, that's not a good reading. Is it a recession? No, it's not, but it is negative for manufacturing. Now, is it going to spill over into the broader economy? Well, it is spilling over in terms of slower growth for the overall economy, negative for the manufacturing economy. Now here I'm going to bring up the chart here in beautiful Creighton blue there. You see that index has been trending down, down, down. And the U.S. index there in red, as you see, for September, it peaked up a bit. Now the number comes out later on this morning. I expect the U.S. number to increase marginally, but not much there. Now, the job index for the Mid-America region, and that's for October, was 44.4, and that's down from September's weak 46.8, so not good. Over the last 12 months, the region's lost 19,100 manufacturing jobs. That's a negative 1.4% decline in manufacturing jobs. At the same time, the region, that's the 9-state region, has gained 104,000 non-manufacturing jobs. That's 1% growth. Inflation gauge, modest inflationary pressures still. We ask about exports or sales abroad and how important they were. Almost 35%, 34.9% indicated they were important to the firm's sales and profitability. Of course, that's a fairly hefty number. 36.8 indicated, that's more than 1 out of 3, indicated that buying from abroad is important to their profitability, the company's profitability. That just brings it home in spades how important trading is with our international trading partners, and that would be all the way from China to Europe and South America, of course, and Africa. Now, what should you or your business watch out for in the next month? Well, first and perhaps foremost is tomorrow, November the 2nd, with the Fed's statement about what they're going to do in terms of interest rates. A hawkish statement, meaning they not only indicate they're going to raise interest rates in December, they are going to raise them in the first quarter of 2017. That would be a negative, of course. Then the second thing to watch out for is this Friday, November the 4th, is the jobs report. If that comes in at something very weak, that could take an interest rate hike off the table in December for the Fed. So look for a very weak number, otherwise we're going to get a December rate hike. Now what's a weak number? Anything, say, below 50,000 and certainly negative would take an interest rate hike off the table. Now, watch the CPI, the Consumer Price Index, on November the 17th. Again, if that begins spiking up there, and it has, but rapidly, then you're going to see a rate hike in December, and you're very likely to see a rate hike in the first quarter of 2017. So those are things to watch out for. Now, what are the risks? Well, the first big risk is a hawkish Federal Reserve statement. That's the Open Market Committee, the Federal Open Market Committee, FOMC. That would be on the 2nd. They come out and they're hawkish. And that's going to be tough for interest rates. It's going to be a little tough for the economy. It'll tend to slow things down. Rising short-term and long-term interest rates, they've been moving higher. I expect them to continue to move higher. You could even see the 10-year Fed, the 10-year Treasury bond move above 2%. That would be, again, a risk factor. Finally, a strong U.S. dollar. I do expect the dollar to increase a bit, but any significant impacts would certainly, significant increases would certainly be problematic for the U.S. economy, particularly those areas of the economy that depend on farming, agriculture, and energy. So, thank you folks for tuning in today, the first business day of the month of November, reporting, as I reported, on the business conditions for the 9-state region, for what we call the Mid-America region, and the report was not good for manufacturing. The overall economy is still growing, not as strong as we'd like to see. The manufacturing economy is shrinking. So we'll have to wait and see what December the 1st brings when I report on business conditions for the month of November. Until then, may your economic cup runneth over.